Hello. I'm not audible, I think. Audible? Can you hear me? Yeah. Okay, now you can hear me. Good evening, and welcome to the first panel discussion. Just to set the context, as Ruchira has already elaborated, but just to add my 2 cents, the mutual funds industry, is at a very, good spot right now. We know that last year, the industry crossed its psychological barrier of 40 trillion. Today, the industry is around 46 trillion, and already the sights are to reach 100 trillion in the next few years. We can debate when it will reach, how long it will take, but one thing we all agree upon is that the industry will reach 100 trillion in size sooner or later. That's a given. But, the key challenge and the key question that we're asking is that in this growth from 46 trillion that we are today to 100 trillion that we aim to be, how is the growth of investors? How many new retail investors are going to come? How many fresh investors are going to come? How many retail investors are going to be in that 100 trillion pie? So that's the question we're asking today because, we have about, the industry has about 4 crore investors in mutual funds. And as far as stock markets are concerned, there are 8 crore unique client codes on the stock market. So that's, the opportunity at the very least that the mutual fund industry is looking at. So what are the big opportunities and what are the big challenges is what we are going to be discussing in this panel. And we'll keep asking this question throughout our panels as we go along. So Bala, let me start with you as the senior most statesman on the panel. Give me one big opportunity and one big challenge when you go from 4 crore investors to 20 crore investors.
I think one big opportunity is coming from what you just mentioned about 8 crores equity investors, maybe about 14 crores demat account holders, and mutual fund unique customer is 4 crores. The way I have seen is post-COVID, most of the first-time investors in India went to the equity market for purpose of either short-term funding or trade in the market where quick money was being made. Therefore, realized money can be made in the market. At the same time, they also seen volatility. Now they have also understood, my own belief is, they have also understood the diversification importance, which the mutual fund provides. And therefore, my first immediate opportunity I see all the demat holders who have been, of course, trading the market without coming to the mutual fund would potentially be a target for mutual funds. So they can actually easy onboard, easy kill, low-hanging fruit. I think that I see it coming. Second is the growing millennials. I think the number of people actually getting into the jobs. Today, of course, each year is rising. The first-time jobs where the mutual fund also, of course, promotes is the first paycheck kind of things, which essentially means every millennials who actually getting into the job can start with one SIP at the first salary itself. Therefore, that I see as a great opportunity. Leave aside others, the millennials itself can actually take the 20 crores investors base very quickly. That's a big opportunity I see. As far as, of course, the challenge concerns, the last 3 years, of course, the growth has been pretty fast. I think the growth came very fast, and people have said only one-sided rally. We have not seen actually the market getting stopped, right? The worldwide, the same scenario, and India also have the same scenario. With equity market, we have to make an assumptions. Every 3 years of bull period will follow by 1.5 to 2 years of bear period or a flat period, which essentially means the challenge which I think investors have to, of course, face. There will be a period of certain period, the returns will be either zero or the negative. At that point of time, people cannot just get worried and then say, no, I'll move away. And that's something I would see as a challenge. But fortunately, so much of enough education has gone from the industry together as well. Also, I have feel that educating investors, staying invested in equity market through a volatile period is most important. Therefore, we address them. At the same time, the new generation have not seen a significant volatility in the market, which is what my own experience is. Whenever the market volatility sets in, it can rip you apart. That also cannot ignore it. Therefore, that period, how you manage things, I think would remain extremely critical from a challenge facing point of view.
Avinash, he's saying that obviously, millennials who are, or people who are joining the job for the first time, that's one big opportunity. Also, the people who have entered stock markets in the last 3 years, and also Bala spoke about the fact that, many of these guys, many of these young boys and girls haven't seen volatility the way we have seen. So, there, as Mr. Anthonarayan also was saying, you heard his speech earlier, right? I mean, education, trust is also there, but risk is also there. So we understand the concept of returns, but we don't understand the concept of risk. So what's the big opportunity and challenge that one big opportunity and one big challenge that you see?
Sure. So, just to take off on what Mr. Narayan was saying earlier, right? I mean, I think we as an industry are in a unique position and have a real incredible opportunity in front of us to enhance the whole notion of financial inclusivity, right? And that's the biggest opportunity when you think about it. So when you talk about the path to 20 crores, you're talking about a 5x change in the number of investors, right? That inclusivity has to come through. And how is that going to come through? It's going to come through getting in more, broadening out that base of investors. So like Bala mentioned that the millennials is one bucket. You've got B30 markets where you do need to expand, and that's where the education angle comes in, which is an important part of what we're going to try and do in terms of expanding out that opportunity. And then also there's one other element I know where I think women investors, right? I know Mr. Narayan talked about that a little bit, but I think as a base, expanding that base is a huge opportunity for us as an industry. So there are a number of different areas within there that can really drive. But if you think about it, if you look at, let's say, mutual funds is not a new concept. It's fairly well understood, but it's fairly well understood by India. It's now our job to take it out to Bharat, as they say, and make sure that the broader country understands that. So when we talk about 4 crore investors, that's out of 100 crore population, adult population, not the total, just the adult population. So exactly to that point. So I do think that there's a tremendous amount of opportunity there. In terms of the challenge, I think the one challenge I think we're going to face across the board is how do we scale this up? And how do we scale this up appropriately? How do we especially scale this up in the B30 markets? Right? Is there an element? How do we expand the education? So there are some real challenges for us to be able to get to 20 crores. But that opportunity set is there. And also, I think where you're talking about understanding risk. I think there was a comment earlier that equities have done well. Previously, as an individual, you didn't do as well. I think that understanding, that appreciation of what risk you're going into, right? So there is a fair appreciation, I would say, of equity risk. But exactly to Bala's point, right? There's, okay, if you've had 3 good years, now you're likely to get 2. We have got to stop thinking in that cycle. We have to start thinking in longer term cycle, because wealth doesn't get created by playing the markets. Wealth gets created by staying invested in the market.
So both sides of the coin.
Absolutely.
You need to understand.
Absolutely.
Just one more question before I go to Vishal. But, both of you all have spoken about financial literacy, and both of you all have spoken about the need to educate India and Bharat. Financial literacy has been Bala, you can back me up on this, but, financial literacy has been the need to literate, the need for these investor education programs that mutual funds have been doing. They have been around for donkey's years. I mean, since 2006, 2000. I remember Mr. Hoshang Sinor had also said when he had taken over as the Amphi CEO, and he had spoken about adoption of districts by fund houses, that you adopt those districts and then you focus your investor education towards that fund. Now, this was in 2008, I remember, after the Lehman crisis. We're sitting in 2023 and your count of investors is just 4 crores, whereas you should be multiples of that. So, as either of you can take this question. I mean, in the mutual funds industry, when we speak about financial literacy, is there a need to reimagine how you educate people or how you do these investor education programs rather than just being a tick box approach?
So I think, in fact, the mutual fund literacy program has not been a tick mark item for the last 3-4 years. Of course, it started off as a tick mark item, no doubt. The moment mutual funds say kitty was created under the Amphi umbrella, as well as the AMC, and a specific focus in it was given that mutual funds say, hey, should be, of course, become the talk of the town rather than mutual funds subject to market risk. I think both have to go hand in hand. At the same time, you need to also believe that, yes, these instruments will do very well in the long term from investor return point of view. At the same time, you need to understand the risk. Today, if you look at the weightages being given to the SAIHE and risk, both are equal.
To which and risk?
SAIHE, mutual fund SAIHE, as well as the risk associated with mutual fund. Both are actually equally given importance there. Having said that, I think Avinash mentioned about, Avi mentioned about the B30. So that one big milestone they achieved. Smaller market today applications are, the number of pin codes in which applications are coming is also rising. At the same time, the mutual fund the literacy have to now taken to the youngsters. Today, youngsters, of course, get to learn about mutual fund investing through the various online platforms, so on and so forth. Now it has to be taken to the school level. That is, I think, next initiative that I think probably will take is take this education at the school level. As they get graduated from 10th to the 11th, they must be reasonably have a better understanding of investing in the mutual fund from their own longer term career point of view. Make those students be aware about investing for the long term. At the same time, make the parents also aware about investing for long term for their own children point of view. This some initiative I think will also be taken by the industry very soon. We will see it next 2-3 months. I think it's each step that we are taking. But I must also mention here is no more a tick mark item. It has become a very serious, deeply involved activities. And given the fact that we now see this advertisement in about 13 or 14 languages in a simple English or maybe a simple local understanding in which you can give no jargons are being used. This, in my view, is a big progress the industry has made.
Okay. Vishal, you are a new fund house, Zerodha. You have already a captive investor base in terms of your demat accounts and all that. Now you have a long road ahead because it's a new fund house, and but in a way it's like you're back where you started so many years ago, trying to sell ETFs. Because you were a part of Benchmark Mutual Fund. At that time, obviously, we knew that Benchmark was way ahead of time. But no matter how great the fund, and personally, it was one of my favorite fund houses, and I'm not supposed to say so, but it was. But let's face it, the fund house didn't go anywhere. ETFs were not understood by investors. So, now in 2023, how are you going to sell this concept to investors and taking forward the financial literacy? I mean, do you think enough has already been done, or do you think you still need to reimagine? Or, as some people say, you might just go to the same set of customers that are there with your Zerodhas and you try and convert your trading account people to buy ETFs. Or are you actually trying to get new customers into your fund house?
So, I mean, thanks, Kayezad, for inviting me. And again, I think the objective is that the number should not be 20 crores. It should be, as Mr. Anand Narayan said, it should be 51 crores. Because, as Avinash said, you have 100 crore, adults in the economy. We keep talking about the fact that, India is going to become a $10 trillion economy in the next 10 years or so. And you can't become a $10 trillion economy if people are not participating in the economy, right? I think what's happening today is, and the problem case that we're trying to solve is that, yes, penetration is limited at this point of time. But I think from our perspective, until you don't simplify things, it's going to become challenging for you to scale up, the product. And when I mean simplifying things, I mean you have 1,000 products across various asset classes. You need to go to investors and talk simple languages. I think, as most of the panelists said, that, there's a huge number of, if you look at India, it's a young country. I mean, the average age is about 27 years or so. Now, when you look at, this population, you got to create a journey for this population. Look at what this population is used to. So you have a bunch of guys who've been brought up, they probably learn how to swipe and to tweet before they can talk, right? You have a population that is today communicating with images and memes, right? You have a population which is got troves and troves of information at their fingertips, right? You got to be creating a journey for them. Until you don't create the right journey for them, you're not going to be capturing, mind space from them. And I think it's very important for us to capture that mind space. And the only way you can capture that mind space is not only to, go back and rebuild the entire journey for them, but also simplify it.
But new customers or existing customers?
New customers.
Absolutely new customers.
Absolutely new customers. I mean,
or are
tomorrow.
You going to bank on your Zerodha demat account holders?
I mean, look, we will be available on all the platforms. But at the end of the day, our objective is, look, how do you get, say, a delivery executive, who's possibly earning 10,000-15,000 rupees a month? How do you get him to start putting in 500,000 rupees into mutual fund products? I think that's the objective.
Suresh, one big opportunity and one big challenge, depending on where you see things, is debt funds. I'm purposely asking you about it because you are one of the best debt fund managers at one point in time. Bala was also a star debt fund manager himself. But today, the new investors that Bala was referring to are all coming into equities. There's hardly any. I mean, even Mr. Ananthnarayan also said that the size of mutual fund holdings and corporate bonds have actually gone down pre to post-COVID levels. How are you going to fix the debt fund puzzle? One is that you've sold equity funds all these years, especially after the great bull run started in 2004. And now the debt funds taxation, benefits have been taken away. That doesn't mean that debt fund is a bad product, but the challenge is for you to convince the investor. How are you going to do that?
Sure. No, so I think as an industry, we have grown quite well in the equity space over the last few years. But you're right, over the last 5 years, the size of the debt fund industry has remained virtually the same as it was before, even as equity AUM has probably more than become 2.5, 3 times. So what has happened is the share of debt in the overall pie has come down. But along with that, there are 2 or 3 things that have happened which are important. One, we have seen an emergence of hybrid asset class, which is actually combining both equity and fixed income in a decent proportion. So both the multi-asset as well as dynamic or balance advantage funds have grown, which give exposure to investors in an indirect way to debt as an asset class and give a decent return to them who are looking for a steady return over a period of time. On debt, pure debt side, I think it's indeed, right now we are asking this question more because tax benefits have gone. But the utility of debt does not just flow from the tax benefit. It's more about creating a balance in the portfolio and getting a reasonable return over a period of time. As we were speaking some time back, some of the initiatives like Bharat Bond or the, let's say, roll down maturity plans and stuff, they've grown really quite well. So that indicates to you that there is an underlying demand from clients who want steady return. And that pie, I think there are 2 or 3 things being done. One, of course, Bala would tell you that at AMFI we are discussing coming out with a dedicated education program targeted at debt mutual funds. So that is just to revive that industry and get investors invested into
You were
that.
anyways going to come up with the debt sahihe or something, and then, the ILFS crisis happened, and then
That's
you had to
right.
change your...
So AMFI is indeed working on that. And maybe Bala can give you 1 or 2 snippets because he's been closer to it. So, but that's something that industry is trying to do. And secondly, I think debt is well accepted in the corporate segment. So I've not really seen the size of the debt AUM from corporates coming down. From the new inflows from HNIs as well as retail clients has slowed down a bit, but it tends to be a bit seasonal as well. So, sometimes what happens is when you have a one-way movement in the market, people want to chase the latest trend. And this is something that will probably even out over a period of time.
But what I am also told that mutual funds are also not interested in selling debt funds now.
I won't say that about us, and I won't say that about people sitting on this panel. I think most of us would want to grow that asset class as well. Debt, I think the reason why this asset class kind of makes sense is twofold. One, the size of opportunity there. If you're really comparing with the bank deposit of 200 lakh crores and mutual fund, debt fund industry of around 13, 14 lakh crores, we are only about 6% of the investable amount there.
And also the B30 towns that you all are talking about. I mean, look at the profile, look at the risk profile of the people who are there in small towns. I mean, if you want to convert bank FD holders or the post office deposit holders, you need to have don't you think you need to have a solid debt fund strategy to sort of push them instead of going and selling equities?
Absolutely. And I would want you also to write a little more about it. And we as an industry will do a little more about it as well. But the reality is, the flexibility that mutual funds provide in debt fund is unparalleled, as well as the building blocks that it gives you from getting exposure across, whether it's for short term or for relatively longer term, is brilliant. It just needs to be brought out a little more. And irrespective of tax, there would still be a demand for it.
Maybe if you don't mind, I'll just add something on that in terms of fixed income, right? If you look at the product set itself, I mean, why has equities done very well for our entire history is also because of the structure of our market, right? I mean, we talked about the fact that our population is incredibly young, so we've got a demographic dividend. Now, when you have a younger population, you are naturally going to gravitate towards more equities, right? So, having a larger percentage of equity ownership is it's not a surprise.
No, there is a difference between larger and zero. As in zero in debt is...
I think the percentage of people that have zero is probably going to be low, but Also, when you look at inflation, equities is the asset class that can actually provide a hedge against inflation. Fixed income very rarely can do that. What it can do at best is to provide you with some element of maintenance of purchasing
Cushion.
power. Right? It's a cushion. What you're seeing now is going to, especially where rates are right now and where the likelihood of rates being, I think debt is going to be an important asset class. It moves back into the camp of being an income generator for you. Right? So, it goes back to education. I mean, what you highlighted is absolutely true, that the ability to move let's say, I mean, with Jan Dhan now, you've got 78% of the population having bank accounts. That is not financial education. Once you've got a bank account, once you've got a savings account, what do you do with it is what's going to be important, and that's the next slide. And the easy transition is to debt mutual funds. So I think this whole debt taxation issue, while it looks like a short-term kind of blip and it is has put a little bit of a dampener, the fundamental reasons of why you own debt in a portfolio have not changed.
Yeah, but the question is about you guys communicating this effectively
Absolutely.
and
So it's
convincing
education.
the investors too.
Absolutely right.
Just
Absolutely.
to add to that, so we are taking one initiative at the industry level, which I think what Suresh mentioned about. We have been discussing about promoting debt as an asset class in addition to equity. Equity asset class is a must from a longer term wealth creation point of view, beating inflation and so on and so forth. But debt will act as cushion. But timing wise, if you look at today, the rates, what is the analogy is being given, or maybe the narrative is coming is rates will remain higher for longer, which essentially means an experience on fixed income schemes will be relatively better than what you have seen in the interest rates are low. And second is, most of the people, of course, do invest in fixed income schemes, into fixed income product of the FD. Definitely, the mutual fund fixed income schemes can also act as an alternate to FD or maybe in addition to FD. I'm not saying FD and these two are completely different from a accrual versus mark-to-market point of view. Definitely, whether it can be part of the consideration, yes. The way mutual fund equity became successful, because it became part of the consideration of every citizen of the country. The same thing we would create as far as the fixed income concerns. Ultimately, we'll leave it to the asset allocation pattern, which either the distributors will advise or the investor will choose to be there.
That's for the advisors and the distributors. But
Correct.
at least the effect, I mean, the push needs
Push
to be
is
there
being
somehow.
planned. Once the SEBI approves, I think we will take off.
Okay. Money control exclusive?
Money control will, no, not exclusive, will together. Collaborate. We always collaborate in everything.
Okay, Bala, I think we are running out, completely run out of time, but I just want to ask you one question. One other puzzle that we need to account for is how are you going to increase the distributor force by leaps and flocks, because that's where the last mile connectivity needs to be there, right? I mean, we were looking at the data and just 33% of the distributors' force actually manage a sizable amount of assets, just more than 10 crores. That's the data we were looking at.
Yeah.
So that, I want you to answer that. And before I let you go, Amphi's unfinished business as your Amphi chairman.
Sure.
Two things.
Yeah, sure. So as far as the distribution expansion concerned, first time ever in the industry, we took out money from the Amphi kitty. There is a kitty of members contribution kitty which is available. It's supposed to be used for the purpose of literacy, including development of the distribution community. Last year, we took out about 8 crores we spent money, which called Karen Shuru, which basically tell people actually to come on board as the distributors, and that's where you can build your career for the future.
But that didn't, the stipend program,
And not a stipend program. It's
that didn't work out.
No, stipend program didn't work. That we did a sandbox approach.
But that didn't work out.
Which of course will make it work. But the current Shuru thing that we started, I think we had spent money on a TV advertisement. This year we actually doubled the budget. So from an Amphi members kitty, the money is of course lying in the bank account today. And we thought that money is to be spent on development of the distribution community. That's something we are doubling our investment this year in terms of spending. Therefore, I am very hopeful that this industry will only expand. And given the fact that next generation of the earlier distributors who have been in the industry for the last 25, 30 years, the next generation, instead of going back to US and UK for pursuing their better career there, they all want to pursue their own business from a mom and dad. They want to take over the business, run it. That itself reflects how they are looking at this industry for the future. That is one. So therefore, you will see distribution expansion will happen on the basis of the assumption I am making. As far as the unfinished agenda concerned, of course, the last board meeting that we had That was my last board meeting as the chairman of AMFI.
Yesterday.
Now I'll be handing over to Navneet Munot. Yeah. I think unfinished agenda, of course, we always have many unfinished.
Be very candid.
Yeah.
Navneet will do everything. He'll take a good look at your unfinished business, but you have to be very clear about your unfinished business.
Yeah, no, two unfinished agenda, of course. Even Radhika is there here as vice chairman with me. One unfinished agenda is we call it AMFI 2. AMFI 2 is nothing but building capacity within the AMFI. Not only, of course, drive the industry to the next level of growth, even we should have a system in the process actually for doing data analytics. We should have a process and system for doing a lot of research related work so that we can actually take proactive measures in industry to advise the investment community as well as the members of the industry. That's the AMFI 2 college is already approved. We are in the process of building the capability and capacity within the AMFI. Second, my own belief is unfinished agenda is, of course, there has been expectation that industry has to have some bit of an ethical committee. Given the fact that industry players are growing and whatever mistake you would have done about 25 years back when we were young, I don't think it can be ruled out by the new youngsters doing the same mistakes in a different form and a different avatar in today's world. Therefore, giving a proper guidance and giving a proper resolution for everything that could happen in the industry, we thought about creating an ethical committee to just ensure that even members, as they have the zeal of growing business, they don't make mistakes. They follow certain processes, which is the most important. At the end of the day, all of us actually are carrying the fiduciary responsibility of managing the investors' money. Therefore, the trust and the faith have to be maintained. That means the industry also have to know about everything that they have to do above the board. That's something we are actually setting up.
Has work already started on
ethical
that?
committee that we will set it up. That's one unfinished agenda.
Has it already started?
Process
work,
already
work
started.
Has started.
Yes. So that's something we'll set it up very soon.
Okay.
Yeah.
Okay, thank you. Thank you so much, gentlemen, for a lovely discussion. I wish we had more time to discuss, but we're completely out of time. Can we have a round of applause for our first panel?